looking to take profits at, I believe, as of 155.8 all the way into actually 157. We're looking at 157. Now, no, we expect that we have already closed that long. If you have not closed that long, you would want to close on a rebound. You're seeing that 1 hour chart here. Now there should be a rebound again on the 5 minutes. So especially with the pairs that are against the yen. You're looking at dollar yen and you're looking at, of course, sterling yen. So there's going to be a rebound at least to 50% of this bearish mast. We would want to close out any longs we are having because we're able to long at lower levels. So let's take a look at these lower levels. So closing at 50% means you're going to be want to close at 156, maybe even lower shoulder here at 156.50, but at least it's 156.20. Current market is 155.70. All right, now let's take a look at what we would do after closing out. This is a buy opportunity now because we're having actually a cycle 3 on this. We have now a cycle 3 trend on sterling yen because we're having positive momentum on the 1 hour, positive momentum on the 4 hours, and even positive momentum on the day, slightly now negative momentum on the 15 minutes because of the current correction. Let's take a good look. So this is the 4 hour chart taken just again a while back. We were going to take profits here. You're seeing, of course, an inverted head and shoulders. So we were going to look to take profits 50% into this cycle. It comes in at 156.5. Possibility to see the top of the cycle comes in at 157.6. Slightly below, of course, is 157. So we want to close out whatever we're holding longs, if you have not already done so. There's going to be a correction. Now, this is a cycle 3. So there are 2 strategies to implement if you wish to consider. We're going to do a position trade. So after closing out, we are going to just stay put at this neckline. We have entry longs at 155.3, 155.25. Remember the strategy for swing trading and position trading. If we are going to be trading a trending issue, which we call it a cycle 3, as you see here, we'll take a look at the 15-minute chart very shortly, would mean that if you want to swing trade it, we always project fib levels from the current market high, as shown here on that 4 hour chart. This was at the time the current market high. It's labeled here wave 3. This is the correct labeling because we have a trigger on the 4 hour chart. You can see you have here an indentation just above 0 line. It means there's an internal 1, 2, and this is a breakout into a 3. It shows here it's an internal 1 and 2 and that breakout into a 3. So any retraction is a 4 and the best entry is 38.2% inside of that Elliott structure. So we want to, for swing traders, position traders, we could consider to buy half size at 50%, 155.6, full size at 38.2%, 155.25, or even full size just above level 1. You know, that strategy that we are now implementing with the United States dollar against the Swiss and the United States dollar against the yen. If you're going to be a position trader, you always want to have an entry up front and another entry just on top of level 1. We just have a stop below, of course, level 1. So right now that entry up front can be done right now because we were looking to buy 155.6 and 155.3. The market is actually doing 155.6. Okay, maybe we get that 155.3. We have it here, 155.288. Looks like we're gonna see it, 155.3. We believe it's a buy. Half size at least 155.280 and 155.3. We would add to that right on top of level 1. Looks like it's gonna be 154.6. The stop is at just 154 and 153.8, as a matter of fact, just below that internal level 1. All right, now let's take a look at the pivot levels. We are buying, of course, 155.6 is that level here, 155.59, 50% above the month open. We're adding at 154. We're adding at that top of level 1 here, 154.6 and 154.5. Over here is showing it 154.93. So we just add below there, which is the month open. Stop is 153.6 or below that. At that level here, we're having 154 and of course that red arrow is above the 153.5, so it's about 153.6. So it's a minimal risk entry, and having a stop below 153.6 or 153.8 here should take us next time to retest 157.6 and even 158. You're doing that same shoulder level and that yellow arrow. Okay, so let's take a look at the momentum for swing trading. So the only negative momentum is that one showing here on the 15 minutes. This is even a 5-minute chart, not even a 15-minute. And you find that yes, we do have what is considered to be contained negative momentum on the 15 minutes. Is just below zero. Could actually be a zero line bounce at a level 1. First level 1 comes in at this point here, 155.3. Next level 1 comes in at this point here, 155. We're looking, of course, for that initial level 1 is at 154.5. So we were looking to buy at 154.6 just to allow for a little bit of spread. Let's take a look at the higher degree momentum. We're looking at 1 hour. You have good positive momentum, continuous, and on the 4 hours, just about. It could be, of course, a top out, but there's also possibility that's going to be an internal level 2. We already have a trigger on that 4-hour chart, 1-2. We talked about this earlier, so we'd expect to have a bounce above zero level, and the market continues higher. All right, let's take a look at this if you were going to trade it as a short-term trader. So this is now a cycle 3. We have at least 2 momentum cycles that are trending in confluence with one another upwards, and this is today's 15-minute chart. We're going to buy the pivot. And we usually buy the pivot early Asia. We didn't get to see that. This is today's 15-minute chart. We never got to see that pivot. Now the pivot actually comes in at 155.3. where I want to make our first entry. These labels are correct here. You're having these white labels here. This is just a 15-minute chart. We're moving in that Elliott structure or Elliott channel. The market did a top out now, definitely in wave 5, with what has happened with the Bank of England. There was an ending diagonal here. It broke lower. It is still moving lower. It should bounce at that level 1 here. This is related to this momentum plot. We have a lower cycle here, a 1 and a 2, because of the negative momentum, higher degree 1 and a 2. Internally, there's an internal 1 and a 2. All of this, of course, is a 3. So the market just did a 4. Could be a 4A, 4B, or 4C, or that was 4 and was doing a 5. And now, at least that was end of 3, definitely. So we're now doing a wave 4. Wave 4 should bounce at the top of 1. Now, this is for short-term traders. It would mean that we always buy the pivot. Pivot comes in just above 155.3. So let's just buy 155.3. Stop is that red arrow here, of course, below level 2, 154.2, about 110 points down. We take this to target tomorrow. All right, tomorrow, of course, we should be taking targets at R1. R1 is this level here. Actually, it's not really, its label is not showing, but comes in at 156.8. I doubt that we'll get to see it today, but we could get to see it Thursday and tomorrow. Even if we don't get to see it Thursday and tomorrow, we close at any relevant level just below this and take in our profits. Breakout high for the week is only 155.5, but that has already been broken above, and we did see the market do 156.6, so it's broken above by 110 points, meaning that the next time we bounce at that level 4, we're at least gonna be seeing, I believe, 156 and 156.10.